All right, welcome to our Executive Edge series. Really excited today with our guest, Mr. Tony Cotto, with NAMIC, the National Association of Mutual Insurance Companies. Tony, very diverse, highly regarded background. Let me introduce you a little bit here for a few minutes. Here, Tony is currently the Assistant Vice President and Counsel, Federal and Political Affairs for NAMIC. Mr. Cotto advises NAMIC members on all legislative and regulatory proposals related to risk-based pricing across property and casualty lines. He frequently represents the association before federal and state policymakers at the National Association of Insurance Commissioners, the National Conferences of Insurance Legislators, and various insurance industry organizations, where it provides analysis, research, and testimony on priority issues for the association and its membership. Mr. Cotto earned a law degree from George Washington University Law School, and his bachelor's degree is in political science from Yale University. Huge welcome, and thank you very much for your time, Tony.
Thank you, Mike. And before we really get into it, we also have to give a shout out. I am married to an EKU alum, so that's
There,
much more important than my background.
absolutely right. Go Colonels always, and yeah, and I noticed, as you know, being in from Kentucky as well, there's a robust, passionate EKU alumni in the marketplace here as well, in the region actually. So
Absolutely.
appreciate the shout out there. You always got to do that. So yeah, Tony, you've had a lengthy career in policymaking and insurance legislative efforts. Can you tell me a little bit briefly about your journey and your current role at NAMIC?
Sure. Thank you so much for having me, Mike. And yes, I came to insurance. You feel like, oh, people always talk about how did you end up in insurance and did you plan it? Nobody ever plans it, seems like. Although
Yeah.
hopefully your students are planning it. From my background was always in politics. Lived in DC, worked in DC early on in my career. And during the financial crisis, I was a lawyer for the United States Senate. We kind of came to figure out through our investigations that the only people who got anything right leading up to the financial crisis were insurers and insurance regulators
Huh.
because they were the ones looking at it and said, you know what, AIG, this is a problem. And as a result, when you saw thousands of banks going down in 2007, 2008, 2009, you only had a handful of insurance companies that went down.
Right.
It was really interesting and it's because of how they managed risk and how they looked at risk very differently than the rest of the economy. So
Great point.
as a result of that, I got to know some insurance regulators, ended up working at the trade association that represents all the state regulators in Washington, and then eventually was in private practice for a little while, representing carriers, served under Governor Bevin over the insurance department and a bunch of different agencies, and have spent the last 5 years at NAMIC, where we are very proud as a trade association. We've got 1,300 plus members. We represent the smallest insurance company in America and the largest, which is really fun.
Right.
But we do a lot on the advocacy front. We do compliance work. We do a lot of different things for our members. My capacity as Assistant Vice President for Federal and Political Affairs, I do a lot of interacting with lawmakers and a lot of educating. There's so much elected officials, by and large, to them when they think about insurance, and this is probably true of most people, is they pay their bill, they get their policy, they put it in their car, they pay their homeowners when they do their mortgage, and that's all that they think about insurance for most of the year.
Until they need it.
Until they need it, until something happens, until they get an angry call from a constituent, and then it becomes, oh man, these insurers. My job is to keep that from happening by making sure that they are knowledgeable, and when there are problems, to make sure that they're not coming after individual member companies. They can come after the trade association. We
Okay.
can have those discussions, but it is, we often say that we serve as both a sword and a shield for insurance companies. We're a
Okay.
shield to protect them and also a sword to help advocate on their behalf when it's necessary.
Yeah, and you kind of made me think. I'm gonna jump ahead a little bit to some of my questions that you referenced. Like you're advocating, for large and small mutual insurers. How do you balance that advocating for both large and small insurers?
Well, they have different needs. They
Yeah.
have very, very different needs. A three county farm mutual that does more tractors and silos than they do cars and homeowners
Hmm.
has very different needs. So we have internal processes, we have councils, we have ways to engage every type of member. We are also very proud that we are a one member, one vote trade association. So that small company gets the same say as the big company.
Yeah, that's a great point.
Now,
Great.
we live in a real world. Obviously, when you're the largest insurer in the country and you call your trade association, you're going to get that call answered.
Yeah,
Maybe a little quicker.
yeah, absolutely, for sure.
But we are not going to let something that's good for um, a 50 state company that hurts a one state writer. We won't
Right.
we won't advocate for that.
Yeah, great point. And I guess then, so that you said that advocating is, you can describe the differences between large and small insurers. Then I guess what would you say the biggest misconceptions are the public has about mutual insurance companies, and then how's NAMIC working to correct them?
Sure. So, the public always thinks that the insurance company is out to deny claims. They're only after themselves. They're going to take your money and run. They're going to make you do lawsuits. That's why we see the trial bar advertising the way they do on
Right.
TV. It's frightening, candidly. And we see verdicts that have, at this point, we're not talking about nuclear verdicts anymore. We talk about thermonuclear verdicts
Wow. Yeah.
where you've crossed it from millions into hundreds of millions of dollars for a single car crash.
Wow.
Um, so we worry about that, obviously. In terms of one of the things that we love to be able to talk about at NAMIC is the mutual model. And when you say, oh, well, mutual insurance, a lot of people don't know what that means.
Mhm.
And they think of, big publicly traded companies and big evil insurance with a giant building
Yep.
somewhere in a city far away. The mutual model is a very different one. It is where policyholders own the company. So our members don't have to worry about their share price. They don't have to worry about earnings calls. They have to worry about taking care of the policyholders and living up to their contracts.
Good point. Yeah, absolutely. And that's such a challenging environment for all insurers, everyone pretty much nowadays. Either if you're the consumer or the company, you get the wildfires going out in California, the floods here in Kentucky as well. It's These catastrophic events seem to be happening on a more regular basis.
Yes, we've often in the last year and a half, really, we've really tried to, as an executive team at NAMIC, coalesce around what's our message, right? You said, well, how do you teach? What's the message? We talk a lot, and we're trying to start messaging it out a little bit more about how, as a society, the United States today, we are entering what we call a new era of risk. When you combine extreme weather, when you add the places that people are moving to, when you realize that, people are moving into disaster prone areas,
Right, right.
you add inflation, and people say, oh, well, inflation is cooling down. Inflation is cooling down on some things. Inflation is not cooling on the things that insurance companies buy. So, roofing materials, car parts, inflation's not cooling on those.
Yeah,
And now I'm not saying insurance companies buy a lot of eggs, but
yeah.
that's a whole separate
Right. Yeah,
issue.
exactly. Yeah.
Um, but litigation abuse, this is a big problem, the trial bar. And then regulatory overreach in the states like California, where you say, okay, well, there's all these wildfires, there's earthquakes, there's winds, there's floods, there's increased risk. I would like to increase my rates. And you have politically elected officials who say, no, you may not.
Yeah. And then that's like, I mean, it's just kind of basic. And I always say I'm not the brightest bulb on the Christmas tree, but I mean, if I'm, taking in $1 in premium from my consumers or my customers, and I'm paying out $1.50 in claims, that's not a sustainable model.
Mhm. Now, and it's not that carriers have to be matching dollar for dollar,
Hmm.
right? Because you may a lot of revenue gets made on investments and on
Hmm.
float, but people also don't often think of the fact that insurance companies by state law are required to keep reserves. And they're not small. It's a large, large amount of money that you have to
Right.
keep to fulfill your promises.
Yeah, absolutely.
Uh, so,
And I saw an article last night actually about one of the insurers in California that had to trigger their reinsurance contracts to help mitigate some of the losses from the fires there. So they have those safety nets too there out there. So
mhm.
and then some of the I guess we talked you kind of talked about some of the challenges there a little bit. Do you see like an environment where government, insurers, public funding, maybe assessments kind of all work together to help the efforts of say FEMA or other catastrophic events in the future?
It's a little terrifying, but I think, for us, we start and end with state regulation at NAMIC. We will defend state regulation. The federal government, from our perspective, has no business being involved with insurance.
Hmm. Good
Um,
point.
we oppose backstops. We oppose the growth of federal agencies getting involved in insurance. Federal Housing Finance Agency, the Housing and Urban Development, they're all looking at insurance and they're like, oh, well, insurance is the reason no one can buy a house. No, no, risk is the reason no one can buy a
Right,
house.
right.
um,
Yeah,
so the
especially
federal
if they're in
government,
especially if they're in a floodplain or need the mortgage and it's required, those type of things. Absolutely.
exactly. So when the federal government starts talking about, oh, we're gonna help, the answer is please don't.
Right, right, right.
But
Yeah,
that's not to say that there aren't some of these programs like you're talking about, some of these, um, whether it's guarantee funds that the
yep,
carriers all pay into, or some state programs that could help with the challenges.
yeah,
One that we just got a new program here in Kentucky for fortified building grants, which I know a lot of agents are really excited about, where a homeowner will get a discount if they build with a stronger roof, for
right,
instance.
right,
That's
right.
been super successful in Alabama.
Yeah,
Um,
I sat through a presentation on that, and we had the commissioner here a month or so ago, and she kind of referenced that as well.
yeah, it's one of the untold stories of how we're dealing with this. And I always like to bring up the IBHS, the Insurance Institute for Business and Home Safety. These are the guys, they have a testing facility in South Carolina where they set things on fire, they blow things up,
Right,
they have gigantic fans that
right.
just blow wind to simulate hurricanes,
Yeah,
and all they do is test for how we make homes stronger and better. And that's
yep,
all funded by the insurance industry. It's
right.
it's one of the untold stories, but whenever you see one of those post-disaster news articles where they're like,
Mhm.
why did this one house survive?
Yeah,
Why did this one house not burn? Well, they built fortified. They didn't have any vegetation near the house to catch on fire.
right.
They
Yeah,
had really nice rock beds, for
yeah,
instance.
yeah. You're right. It's such the untold story within in our segment of our industry there. That's definitely needed there as well. So and I think it's probably maybe just going to continue to expand in the future. Uh,
That could
you know,
be a fun field trip for your students.
yeah, South Carolina, North Carolina, absolutely. Yeah, but we sat through. They were up in a conference we attended, and we sat through a session there. It was pretty interesting, actually, on roofing and the fortified roofing. Yeah, and especially as we go into wind hail season here in Kentucky. Yeah. Um, a couple more questions. As kind of talking about the government and regulatory. Do you have any does NAMIC have any like key legislative or regulatory priorities in the next few years that you
Sure.
can talk that you can talk to,
Yeah,
or
absolutely. So I think the big issue, right? If we ask our members, what do you want us to help you with, right? Right after they say, please make it stop, meaning just the general government overreach, um, the next question is, how do we bend the cost curve?
Mhm.
How do we make it less expensive for insurance companies to live up to the promises they've made?
Yeah.
And the ways we do that, we defend state-based systems, we defend risk-based pricing, We defend underwriting freedom. Um, and that's all defense. On the offensive side, it's promoting things like resiliency, promoting tort reform, limiting legal fees, limiting um, all of the problems, right? At the federal level, we fight for things like the Fix Our Forests Act, which deals with underbrush and correctly burning and making sure that those fires,
Right.
we know wildfires are going to happen. Let's make them less bad. We know hailstorms are going to happen.
Yep.
Let's protect our houses and cars against that.
Yeah.
How do we bend the cost curve down? Things like right to repair your own car or take your car to whatever shop you want
Yeah.
so that you don't have to go back to the dealer. Um,
Great
things
stuff. Yeah.
like, we combat fraud, we combat organized crime. We want to encourage empowering law enforcement to help us because part of what they tell us a lot of times, or they tell our members, is, well, insurance crime, it's just so low on the scale. And we say, well, not to us.
Yeah. Yeah. And then you touched on too, like fraud. I mean, I don't even want to go there with that. I mean, that's just like the elephant in the room as well, with, always having to be on alert and manage that too as an insurer, legislator, commissioner levels, all those different types of things. We got to manage that too. So
Yeah, Mike, I'll
I,
touch on one more note real quick on just
sure.
what are we for. The other big thing I think that we're starting to have more and more conversations about is improving roadway safety. Um, we cannot bend the cost curve. We can't control the price of cars. We can control working with departments of transportation, working with counties, working with local officials and law enforcement to make it less deadly to be on the roads.
Yeah.
Because 40,000 lives a year is absolutely a mind-boggling statistic.
Yeah.
And each of those crashes not only can results in loss of life, there's actually, I think I saw like 8 million crashes a year in the US recently and 40,000 lives lost. Each one of those turns into an insurance claim
Hmm.
and they are bigger and bigger. So, how do we make the roads safer? Don't text and drive, DUI checkpoints, all of the things that we can do to make roads safer so that
Self-driving cars.
you know what? We are engaged in some of those conversations,
Yeah.
and the questions around AVs are not all that different from general insurance questions of who's going to pay when it gets in a crash
Right.
and how do we validate the safety of an AV?
Yeah.
Because I'm with you. If we can validate the safety and we can figure out some of the liability questions, the most dangerous part of a car is often the human driver.
Yeah. Texting or driving with a knee or that type of stuff.
Yeah,
Yeah.
or eating, or
Yeah.
you see always makeup being put on.
Yeah.
The
Yeah.
number of cars that you'll drive by where not only is someone on their phone, but
Right.
they'll even do the thing where they hold it and talk into the speaker
Yeah. Yeah.
or have earphones on or earbuds
Yeah.
in while they're driving. It's
Uh,
driving
yeah.
safety is a big problem,
I
and
can
that's
imagine.
an education issue as well.
Yeah. Absolutely. Yeah, that great insight there. And then I guess I'd be remiss if I didn't mention artificial intelligence, right? So I mean, I don't, if I don't know if it's impacting kind of what you're doing or what you're seeing, but like how is it impacting mutual insurers business and what opportunities or threats do you see?
Sure. And not only our members, but the regulators as well.
Okay.
They are very in tune with and want to know how are insurance companies using AI? What are you doing with it? Are you using it for underwriting? Are you using it for ratings? Are you using it?
Hmm.
The cynics among the regulators say, oh, well, you're just using AI to deny claims. Well, that's not true.
Yeah.
That's not how it's actually working. And our view remains that technology is great if it is improving and empowering humans at insurance companies to make better decisions or do things more efficiently. Technology for the sake of technology is dumb.
Yeah.
It doesn't help anyone. So when I see all these insure tech conferences and insure tech movements, and I say, well, are you matching risk to rate? then it's not insurtech, it's insurance.
Exactly. We've been
Are,
doing that. Yeah.
right. Are you helping us do it better? Then cool. Then that's insurance technology that's helpful. Um, AI, at this point, large language models are being used some by bigger carriers. A lot of vendors are using them. Some of our smaller carriers do use through vendors. I will say, not to toot NAMIC's horn too much, but we sort of were a little bit ahead of the trend here and hired a couple of years ago a new position who is our director of AI and machine learning policy from the trade association perspective. So she talks to all of the folks at our member companies that are working on AI issues. She is our representative. She might be a good future guest. Her name is Lindsay Klarkowski, and she is just tremendous on these AI issues.
Oh, wow. I'll take you up on that if you can tee that up.
Absolutely.
Well, great.
Absolutely. But the point is, though, that the technology so much revolves around what AI actually is. I could make an argument that a calculator is AI.
It was 30 years
Or
ago.
right, or that an algorithm that, my wife's chicken soup recipe is an algorithm because it's just a series of steps that you
Yeah.
have to follow.
Yeah.
So what exactly people mean and how they sell it and what they say AI is being used for, we continue to say if it's being used to make insurance companies better, more efficient, and delivering a better product, then the regulators shouldn't mind.
Right.
Um,
Yeah.
we'll
Yeah. I mean,
see.
yeah, yeah, exactly. I mean, it's if we don't pay attention to it, we'll get just blown over by the wave. I feel, and I'm an old guy, right? So I'm like, I gotta, try to choke my way through it and embrace AI because it's coming. If you don't, we'll get run over. I feel.
hmm and
Yeah.
I don't want technology folks in charge of the insurance industry, candidly. Like
True. True.
it's not a knock on them necessarily, but
Mhm.
there's a reason that most of our member companies have been around for 100+ years.
Good point. Yeah, you're right. Good point. Yeah, before cars even.
Exactly.
Well, hey, Tony Cotto, Assistant Vice President, Counsel, Federal and Political Affairs for NAMIC. It's always a pleasure to chat with you, Tony. Thank you very much for your time today.
Absolutely. Take care, Mike. Thank you.